November saw pending home sales increase for the fourth straight month to their highest level since early 2023. And this comes as home construction stocks are on pace to close out their worst month since March of 2020. But joining us now is Dallas Tanner, Invitation Homes CEO. Dallas, it's great to have you back on the show. Welcome.
Hi, Morgan. Good to see you. Happy New Year.
Happy New Year. So you were on with us back in May, and you talked about the fact that you were seeing insatiable demand, that you were seeing the lack of housing supply was helping to fuel that. You expected additional pricing pressure on housing for most of the year. What are you seeing now as we head to 2025? And even though we've had a Fed that's cut a couple of times, we have Treasury yields and thus mortgage rates still very high.
Yeah, interest rates have proven, a little bit difficult to forecast. I think everybody's dealing with that near term. What we found is sort of at the mid part of the year, we start to see demand definitely start to normalize, which we view over the long haul as something that's extremely healthy for the consumer. What's been, I think, most interesting along the way has been this propensity for customers that are in place or have housing solutions figured out to continue to renew and are continuing to stay in the for lease business longer and longer. Seems like the home builders are getting a little bit of that, kind of coming back to earth process happening as well, but it's still incredibly healthy. There's not a tremendous amount of supply in the marketplace. And so if you have something, you're probably in a position where you want to hold on to it. If you're fighting for that customer today, you have to fight a little bit harder than we did maybe back in May.
Interesting. So we know that the inventory has continued to be tight. We also know home builders have stepped in to at least begin to make up some of the difference, even as mortgage rates have stayed high and existing home sales and sellers that have low mortgage rates are basically golden handcuffed, quote unquote, in their current properties. What does it take to see that balance out and that piece of it normalize more? And I ask that knowing that you have, in the process, struck deals with some of the home builders to be able to acquire more inventory yourself.
Yeah, we've got an incredible business right now in building new product. We have roughly 2,000 units under contract or in contract to be being built at this point in the marketplace. And it feels like with our national home builder partners, there's an opportunity to probably do a lot more of that here in the future. I think, the mortgage rate thing's been really sticky, right? And in our markets, for example, at the end of Q3, it's about $1,000 on average cheaper per month to lease than it was to own. Now, that's not an indication of where home builders or for lease product might be at any given time, but it certainly weighs on people in their near-term decision making. And so as you think about that, as if you're a family, $12,000 a year cheaper to lease than maybe to own, that probably does hurt some of the retail sales market. But again, it's been such a lack of supply over the last 5 years, 6 years. Builders have done really well. I think on the for lease side of it, we've got to continue to lead in, build more of what people are calling BTR, these fully stabilized, fully encompassed rental communities where families can be completely down payment light, right, build credit through positive credit reporting, and also have that same lifestyle, but be not out as so much upfront in your upfront costs.